Good afternoon. Welcome to daily currency update from the currency desk. What we have witnessed in the rupee against the dollar today is an opening above 54, and as usual what we have seen is that the RBI has sold dollars at 54 levels. So what we can see distinctly in today's market is RBI trying to protect the 54 level and trying to ensure that the dollar rate doesn't cross 54, cross above 54. Also contributing to the rupee weakness is the inflation, which was very high. The inflation data released yesterday showed a high inflation of 7.23%, which is relatively bad for the Indian economy, as we are trying to fight slow growth. So again, an inflation concern is also hovering around our economy. Also, a Reserve Bank bulletin indicated that Reserve Bank has sold $1.78 billion in the market, foreign exchange market, in March. Also, it has sold another 550 million. What we have in the global front is that China's FDI has decreased, FDI investments that is, has decreased by 2.4%. This has strongly given a signal that the investors don't have that much confidence on the relative growth of the Chinese economy. Also, at the same time, they do not have much expectations or lower expectations of growth from the global economy. They are skeptical about the relative weakness in the global economy. This shows what we expect in the rupee against the dollar is it is expected to test new highs. The crucial resistance level at this point is 54.32. If it crosses 54.32, then we might see rupee trying to test new lows. But till it does not cross 54.32, what we would advise is book long positions and exit. Fresh long can again be initiated above 54.32 levels. On the Europe front, what we have seen yesterday is that the Spanish bond yields have increased and reached new highs. This was immediately after the bond auctions, so it has had a negative impact on the Spanish economy. The borrowing costs are constantly increasing. This is expected to increase the main cause of concern, that is the deficit for the Spanish economy, and it cannot easily finance this deficit also at such high cost of borrowings. Also, what we saw is that the credit default swaps have increased in rates. The credit default swap rates have reached all-time high euro levels. That is, in the entire eurozone, no credit default swap rates are at such high as the ones in Greece. The European political turmoil is also weighing in on the euro. We have seen it fall below 1.3 levels, and now it is testing support levels of around 1.28. Sorry. What we have seen is that a fight between the austerity measures and those against the austerity measures. What we have seen in most economies like Greece and France is the opposition parties are going against austerity measures. So this is causing a lot of problems. We suggest with a stop loss of 67.40 in the spot. At the same time, what we are seeing in the Great Britain pound is that it is sustaining the support level of 1.60. It is sustaining well above that. So it is showing a relative strength against the dollar. If today's trade balance data in the UK are above expectations or slightly better, then what we could also witness is further rally in the pound. We can expect a trend reversal in the pound to downside from 87.18 levels in the spot. Hence, if it breaks above 87.18, again there would be a fresh buy trend that could start in the pound. In case of the Japanese yen, we have seen some rally in terms of safe haven demand. It is moving alongside the dollar, and at the same time what we are seeing support for the yen is the fact that the economy is performing well and the 1% inflation target is expected to be reached. At the same time, the Bank of Japan is expected to bring in more easing in the economy so that the target of 1% inflation is met. Hence, we suggest that we can buy yen at current levels, and as well as that on all dips, all long positions can be booked at current levels, that and if the yen crosses 67.77 levels in the spot, then only we can have fresh long positions initiated. Thank you.